Hello investors, traders, and Market Club members everywhere. Adam Hewison here with your market report for Thursday, the 10th of October. We're going to be looking at a number of stocks and some of the indices today, and we'll start off with the Dow. Now, as you know, we had a signal on our monthly, which is pretty unusual, on the Dow. We did not see that on the S&P or on the NASDAQ. However, this is what I want to point out to you, and that is we saw a low on this day right here. And it turned out to be very close to what this low was. And let me give you those numbers because I think they're pretty important to look at. On August 27th, which is right here, this is August 27th, we had a low closing of 14,776.13. This day, this is on the October 8th, it had a low of closing 14,776.53. So we did not close in new low ground. Very, very close, but we didn't close in new low ground. Now, look at how we've seen this market turn up based on the Williams percent R. You can see that indicator right here. This is just standard fitting on the Williams percent R. Very similar to what happened here and here. We're going to be looking at some other indices as well. So let's move along. And we say that we could see this market actually come up quite a bit higher than we are right now. So let me just clear the screen. This is the S&P 500. Now, we did not get a signal to exit this with a monthly. You can see the monthly, I scoped this out just a little bit further, is still in place all the way back here, and that's in January 10th of this year. So it's been going up pretty steadily. It can draw a pretty close trend line and show it kind of all hits really where the support should come in. It did come in. And we sort of turned around a little bit today with the sort of more slightly possible optimistic view coming out of DC. So anyway, the markets tend to be wanting to go higher. The monthly trade triangles continue to be positive, and longer term we think this market's going to go higher. Much the same picture on the NASDAQ. There again, it didn't have our monthly trade triangles definitely in place. It looks like it wants to go higher there also. So moving on, lots to cover. We're looking at Apple today. The big thing with Apple is right here. And if we can close over this level at 91.09, so I'm saying 491.10, we're very close to that level now. I think we've made a base and we're going to push this market up to go higher and take out the line in the sand that we talked about. Still very bullish on Apple. It's been a while, but it looks like it's building at a higher level and it's ready to go higher. So again, one of the patterns you could look at in this market, it's not quite totally clear, but I'll show it to you anyway, is this sort of rhythm of this market's taking place is right here, here, here. And I think if we can just take this, just draw a rough line here, if we can get this going through this resistance at the 491.10 level, I think we could see this market really shine and move up and move over the $500 level pretty quickly. So let's see what happens there. So moving on to the next market, that's going to be Amazon. Amazon has had the pullback. I've got a Fibonacci in here, but let me just take that out, clear the screen, and put in this perfect Fibonacci retracement. You can see right here, it came back. In fact, if I put the candlestick charts in, you can see it hit exactly. Let me just scope that in real close so you can see it hit exactly at the Fibonacci retracement. This is a bullish pattern. We've got oversold. I think we're going to see Amazon back up the 320 level in the not too distant future. I think we'll see Amazon back up over 320 in the not too distant future and making new highs towards the end of the year. So let's see how that plays out. Moving on to our next market, this is the Eurodollar. Eurodollar, we've got a new chairwoman, and that's Janet Yellen. Let's see what she does to shore up the dollar. But right now, the trend is your friend, and the trend definitely is positive for the euro and not the dollar. Moving on to the crude oil market. Again, we're getting this sort of little double bottom action here. I think it's something to really, really pay attention to, and this is what I want to share with you today on crude oil. And this is November crude oil, and it's this. If we get this double bottom, we look at these patterns all the time. We think they're very important. Let me just take that off the screen. If we look at this double bottom pattern right here in this little pivot point, sort of you've got that pattern. If this holds, we've got a strong day today, and we see this market next week going over this level. Then we're going to challenge these levels right up here, right around the 108 level. I think would not be too far. 107, 108 would not be out of the question in this market. So I like the action here, possible double bottom. We've got a longer term positive. Only the intermediate term is a little bit negative at 103.74. It's 103 102.73 right now, so we've got a little ways to go, but I think we could see this market actually improve from where we are right. Moving on, gold. Gold continues to just chop around sideways. We talked about our trade triangles have been spot on in this market. Look at the gold report we did earlier. You can see we looked at this market in depth. We still think it's building a big base to go higher, but it's certainly not there yet, and the triangles aren't saying that it is. So let's watch it and keep it on our radar. Moving on to the Russell. We had a question for Russell. Someone asked us about this in our report. This looks like a perfect, again, another Fibonacci retracement. If you just draw the lines in here, you can see quite clearly how this works. From the highs, just drag and drop, and you can see we got right down towards that Fibonacci retracement level. We talk about the 61.8%. How this works, nobody knows. I don't know why it works, but it's cause and reaction. So every forward movement, you can have a backward movement, and this is the 61.8%. It happens in nature. You can look at it's a fascinating thing. You can study it forever. In the markets, it's 50, 61.8%. They're the important numbers. So looking at this a little bit longer, because I know we had several members asking us about this Russell index, and this is the Russell 2000. So let's just scope this out a little bit further, and let's put a line close on it. So let's just go, let's say 1 year perhaps, and you can really just draw a trend line that's in place. Actually, I want to draw a trend line from this point here, so let me go a little bit closer. You just have to draw a trend line from here through here, and you can see how it just hits these spots perfectly. So I think until this trend line is broken, that's the one that from May, I think this market is very much in a positive mode. You can see the monthlies are still very positive longer term. Intermediate term is a little bit negative right now, but that's overweighed by the monthly. So moving on to our next market is Facebook. Facebook, I think, is a ginormous market, of course, but you can see that we have a very positive action on Facebook today. We had yes, there was a low. Again, this is a Fibonacci retracement. I really want you to become familiar with Fibonacci, because it really is an interesting science. And Fibonacci, we just put that, we go from the highs, scope that down, and you can see we got pretty much into that zone. We talked about the 61.8% buying zone. And especially when you have a green monthly trade triangle and you have a green weekly trade triangle, then you want to be buying dips in any market. So this is a perfect example of that. So moving on to the Talisman Energy. This is the one that was purchased by Carl Icahn. I think it's 6% of the stock, and I think this looks good on a longer term basis, because if we scope this out, just put a close only chart, and we get some more depth to this market. You can see it's actually been way up towards the 24 level, 25 level. So here we are, half that. I think there's a good chance we're going to see this market go considerably high. I think it's a very low risk bet at this point in time. So let's see how things play out, but we've covered a lot of stocks. There's a lot to go over, and we think that we're going to have an agreement in place by this weekend. So let's see what happens. Keep our fingers crossed. I'm Adam Hewison from Market Club. Thanks for stopping by. Talk to you soon. Be sure to comment on our blog about anything you see on our website. Your voice is important. Thank you.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.